What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. I'm gonna go ahead, break it down, share with you guys how I got this portfolio from $10,000 to over $125,000. I'll share with you guys all the different stocks I have in this portfolio as well. But in less than 1 year, I've gotten this portfolio from $10,000 to over $125,000. But on this channel, I like to be fully transparent, share with you guys on a week-to-week basis where the portfolio's at. If we just look at my past videos, in every single thumbnail, I'll share with you guys where the exact portfolio is sitting at, along with a certain topic that I'm going to go ahead and discuss during that video. But if we look, guys, and if we keep going back almost 1 year ago at this point, I had my first video on this channel and my portfolio was sitting at $10,600. And basically that video was talking all about when Warren Buffett sold out of the airlines. But we started from $10,000, and currently, as I'm recording this video, the portfolio is currently sitting at $127,831. Now, just in the last day, guys, the portfolio is up about $650. And just to share with you guys where this portfolio's been, in the last week, it's up $2,575. Last month, we are up $4,700. In the last quarter, we're up $2,347. And then all time, or in the last year, we are up $5,471. Now I'm going to show you guys some of the features with M1 Finance because I like this platform to go ahead and grow your portfolio because of the disciplined investing strategy that M1 Finance uses. But just looking into my portfolio here, I have this portfolio broken up into the different pies. Now I have it broken up into growth and dividend stocks. But within the growth and dividend stocks, about 70% of the stocks are focused around growth, and then 30% of the portfolio is broken up into dividend stocks. But as I jump into these pies, guys, just to show you guys a little bit about M1 Finance and why I think this is the best way to grow your portfolio from $10,000 to $125,000 is because of their overall disciplined approach. With M1 Finance, you can basically go ahead and create different pies. Once you create the different pies, you can set an allocation or target allocation towards each pie, and then you can set it up for auto investment, where every single week or every single day, it'll go ahead and auto invest that money for you. The approach is very disciplined because with M1 Finance, you only have 2 separate trading windows. Basically, you have a trading window every morning at 9:30 a.m. and then every evening at 3 p.m. And outside of those trading windows, you actually cannot buy or sell a stock. And if you buy a stock the same day, you cannot sell that stock the same day. M1 Finance uses a more disciplined long-term approach, but to me, that actually keeps you extremely disciplined because you're not day trading or swing trading. When you're buying stocks for the long term, you're getting more conviction by investing in those stocks. And at the end of the day, if you're convinced that the stock is going to go up, that is the best strategy. So as far as just showing you guys the different tabs on M1 Finance, this basically, the portfolio tab basically shows you where your portfolio's at. They have it shown in the pie where you can see how much allocation you have towards the different sectors if you break up your pie in that way. Plus you can see your activity, basically every single trade that you're making, plus the dividends that you're getting in your portfolio. You can actually see all your different holdings. So I have currently 34 holdings in my portfolio. It's telling me my cost basis, and it's also telling me my unrealized gains. And if we look here, these are some of my top investments in this portfolio, starting with Tesla, Apple, Nvidia, Disney, and then Roblox. Plus, guys, you can also see your funding history. The funding history is really nice because you can actually set up a Roth IRA with M1 Finance, and with the Roth IRA, because you can only contribute $6,500 every single year, you basically know exactly where you're at. Now, additionally, along with the investment tab, there's also the spend tab, so you can actually have money that you're putting away into like a savings account where you're actually earning 1% APY, or basically interest rate, in the funds that you have in this. Plus, if you use the debit card, you're also getting 1% cash back. Plus, with M1 Finance, if you do have their Plus account, you are eligible to go ahead and borrow a certain amount of money from your portfolio at a 2% interest rate. So it's not a bad feature. Ultimately, though, I will say never go into debt or never borrow, because ultimately when you're borrowing, you're taking a bit more risk because if the stock goes down, and that's just going to make you a bit more nervous because you've actually borrowed that money and you're losing money from the interest rate that you got to pay on paying back that loan, plus you're losing money because the stock price went down. Now the research tab is a pretty important tab here because in regards to when you're setting up an M1 Finance account, when you go ahead and create your pies, you want to go ahead and you create your pies and stay organized with that, because once you go ahead and let's say that I want to go ahead and take a stock out of my growth pie and put it into technology pie, I actually have to sell that stock before I can move it into the technology pie. So there's no way to go ahead and move a stock. You have to sell it out of one pie and move it into the other pie. So when you're setting up your account and when you create your different pies, you do want to go ahead and think ahead if you want to have different pies or if you just want to have all your stocks just on the main platform. But just running through some of the research tabs here, you can see your market news, basically all the different headlines from the day. If you want to go ahead and look at the different stocks, I really like this because you can go ahead and see the stocks, categorize them by market cap, dividend yield, price history. Also look at their 1 year, 2 year, or 5 year price, if the price went up or down, as well as the PE ratio. Now you can also filter it by many different options right here. So if you are looking at different sectors, you can also filter it just to see the different sectors out there. So if you want to go ahead and let's just say that I want to go ahead and add a stock into one of my portfolios. Let's say I want to go ahead and add Berkshire Hathaway. I can click on that company. I can do some more research as far as looking at the performance. I can look to see if they're paying a dividend yield, look at their market cap, and then also look at the PE ratio. But if I want to go ahead and add the stock, I just click on add to portfolio. It'll ask me which portfolio I want to go ahead and add to. I can add to my bucket list portfolio. I do have my Roth IRA, so I can add to either one of these. And then I just click add, and it'll be right in that portfolio. So it's pretty simple to go ahead and add a stock, as well as you can go ahead and add different funds. So if you want to go ahead and research a fund and go ahead and add it, same exact way, you can go ahead and research. Actually, you can go ahead and type it into the search field if you have a particular fund you're looking for, or just use some of these tabs to go ahead and see all the different funds out there by market cap or dividends. But these are going to be some of the funds for a long-term investor that's really focused on maybe index funds or ETFs. Now, when we go ahead and get to the pie, this is where I was talking about where you can go ahead and create a new pie. Once you want to go ahead and create a pie, you can go ahead and put stocks and funds in there. So let's say I'm going to go ahead and put Facebook, Berkshire Hathaway, Tesla, and let's say Alibaba and Visa in there. I can go ahead and click add. Once I go ahead and click add, I'm able to go ahead and name this pie. So if I want to go ahead and name this pie, I'm basically just going to name this pie test 1. And I can go ahead and set the allocation. So if I want within this pie, 80% of my allocation, let's say to go towards Tesla, I can go ahead and change that to 80. This has to equal 100%. So with the rest of the pies, I have to basically make sure that it's equaling up to 100%. So I'm going to go ahead and change the other ones to 5% to go ahead and give me 100. And if I wanted to go ahead and add additional stocks, I can just click on that. Otherwise, I can go ahead and just click on save. And then it's going to go ahead and just confirm, hey, this is a new pie that we're adding. This is the allocation that we have in here. And we're just going to go ahead and confirm. Once I go ahead and confirm this new pie is now going to show up. And basically, I can go ahead and add it to the portfolio right from here. Or if I want to just see all my different pies, these are some of the unused pies that I have from previous videos, but basically I can go ahead and add it from here. Now, if you don't want to go ahead and create your own pie and just look at some of the pies that M1 Finance has, you can also see them here with some of the different generic pies that M1 Finance offers based on if you want to go ahead and focus on earning income, if you want to go ahead and plan for retirement, but it gives you some great options to go ahead and look at some of the pies that they have. Plus, guys, if you just want to go ahead and watch certain stocks, you can go ahead and add them to the watch list here. And lastly, the transfer tab is basically going to go ahead and show you how much in total that you have with M1 Finance. Showing me currently my balance is $146,000, and that's because I have about $127,000 in my bucket list portfolio, and then I have about $20,000 in my Roth IRA. But guys, that's in general some of the features in regards to M1 Finance. Now, why I wanted to go ahead and share that with you guys is because I believe one of the biggest tricks to growing your money and how I was able to stay disciplined from growing my money from $10,000 to $125,000 is because I'm using a platform like M1 Finance. Because with this platform, it's a very disciplined approach where you can go ahead and invest every single week, have the money auto withdraw from your bank account, get transferred over to your M1 Finance account, and then go ahead and just use auto invest, or go ahead and just allocate and buy into your portfolio every single week, where the funds will automatically get allocated towards the target allocations that you have towards the different pies and towards the stocks in those pies. So discipline is basically the first focus here in regards to growing your portfolio. With different other platforms out there, and I don't want to get into names, but a lot of other platforms out there, because you can go ahead and actively trade or day trade, you are setting yourself up to go ahead and get in and out of stocks, maybe at the worst time, because if a stock falls a lot, you're probably going to want to go ahead and get out of it because you're losing a ton of money. But with M1 Finance, you don't really necessarily look at the particular stock, because when the stock's going down, if your approach is a long-term approach, you're actually going to want to go ahead and buy more into that stock, so you can actually go ahead and reduce your average cost in that stock. So that is the reason why I really like this platform, and I believe this is one of the best ways to go ahead and grow your portfolio. Now, the second way that I have grown this portfolio is by dollar cost averaging. With the power of dollar cost averaging, as long as you have a set amount of money that you can set aside every single week or every single paycheck and just keep investing into the portfolio is going to go ahead and grow over time. Dollar cost averaging with the power of compound interest is, in my opinion, the eighth wonder of the world. A lot of people forget the power of compound interest. And with dollar cost averaging, you don't have to worry about the stock price going up or down any particular day. In this case, I mean, if we're looking at the NASDAQ today, the NASDAQ is up, but in the last week, we were taking a hit. In the last 3 months, we were taking a hit. In the last 3 months, we've seen some ups and downs in the stock market, and especially in technology stocks. But because you're focused on dollar cost averaging, you're really not particularly looking at the short-term price. And if the stock is actually going down, it's actually a better time to go ahead and invest in that particular stock. So dollar cost averaging, in my opinion, is one of the best ways to go ahead and grow your portfolio. Now, in my case, I'm investing anywhere between $200 to $1,000 a week, but I've reduced all my other expenses so much that I'm able to go ahead and do that with the cash flow that I have coming in from my businesses. And just by reducing all my other costs, where I've been able to go ahead and pay off my credit cards, pay off on a lot of my bigger expenses, so I have enough cash flow coming in. When I started this portfolio, I was investing anywhere between $20 to a couple $100 a week. But now, because I was able to go ahead and reduce my expenses, I'm able to go ahead and slowly increase how much I'm able to invest in this portfolio. But if you stick with the strategy of dollar cost averaging, this portfolio is always going to be on your mind. And ultimately, as you see this portfolio grow, you're going to be more convinced to go ahead and add more to this portfolio. So dollar cost averaging is going to be the second thing that I believe is a great way to go ahead and grow this portfolio. Now, the third way is going to be a little bit more risky because you're relying on the stock market, but it goes hand in hand with the first and second way, where you're dollar cost averaging, so you're investing more in the stock market, plus you're using a disciplined approach. But this is going to be by investing in dividend stocks and investing in growth stocks. By investing in both dividend and growth stocks, here's the reason why I really like that. With dividend stocks, these tend to be usually a little bit safer stocks unless you're going after high dividends, which I do not recommend. I say go after a bit safer dividend stocks, which are dividend aristocrats or dividend kings. And I'm not going to get into that in this video, but you can check out my other videos or just type it into Google. But basically, those are stocks that have consistently been paying out dividends for 25 or 50 years. With investing in those stocks, you're getting more cash flow. And cash flow is king, because when you're getting more cash and you're getting paid out those dividends, as long as you're investing and reinvesting those dividends with the power of compound interest, those dividends are just going to grow even more over time. So I like the idea of investing in dividend stocks because of the cash flow that they bring. And if we just look, guys, in my activity, and if I just go ahead and sort this out by purely dividends, just in this last month here, in May, these are some of the dividends I got. In June, these are some of the dividends I got. So Target, I got some dividends, Microsoft, Realty Income, Costco, Abby, Apple, American Express. Now, I like to see this with Apple, where I got $26 in dividends. Next time, I should be expecting to get a little more than this because Apple has consistently grown their dividends for the last 10 years. Same with a lot of these other companies. With Costco, they've been consistently growing their dividends for a very long time. Realty Income, another one that pays out a monthly dividend, which has been growing their dividends for the last 25 years. Microsoft, Target, all these companies do pay me out in dividends. So I love investing in dividend-focused stocks because of that reason. But now, the other way is a little bit riskier, and this is by investing in growth or technology stocks. Now with growth stocks, I am investing in stocks that I believe that there is a 10x potential for. Basically, if one of these stocks doubles, that's just 2x. In my opinion, a lot of the stocks that I'm investing in within this portfolio have the potential for 10x. Now, yes, I'm down a little bit of money in some of these growth stocks because I actually started adding on to this growth pie and added these growth stocks at the beginning of this year. And for the growth stocks this year hasn't been so good, but it's okay because I'm able to go ahead and keep on dollar cost averaging to grow my position because I do believe that these stocks can go ahead and 10x. So as far as the growth stocks go, these are just some of the stocks I have, but this is another way that you can go ahead and grow your portfolio 10x is by focusing on these stocks. Now at the end of the day, this is more out of your control because you're waiting for these stocks to grow over time, where some of these stocks could sit steady and basically be trading sideways for a long period of time. But once they break out, you can easily see double your returns up to 10x your returns. And these are some of the companies that I'm highly convinced with, but I'm not going to go ahead and go through this in this video, but I will have a link down in the description where you guys can go ahead and check out some of my growth stocks in this portfolio. So these are going to be the 3 different ways that I believe a disciplined investor that's dollar cost averaging and that's focused on growth and focused on dividends can go ahead and grow their portfolio from $10,000 to $125,000 plus. Now, I am going to keep on investing in this portfolio. The goal is to get this portfolio to over $1 million, but it's slow and steady. This didn't happen overnight. It took me 1 year by dollar cost averaging, by staying disciplined to my strategy and investing in these stocks. If I sold out of these stocks every time that I seen a hit in the stock market and I tried to buy back in, I wouldn't be in this situation right now, and more than likely I'd probably be losing money because I'm not good at day trading. I've lost money day trading in the past because you never know when to go ahead and exit a stock and when to go ahead and buy back into a stock. So that's why I really like this approach, and this is personally how I got my portfolio up to this dollar amount. But if you guys want to stay on this journey and see my journey to $1 million, that's basically my focus with this portfolio short term. In the next couple of years, I do want to go ahead and get this portfolio up to $1 million. I'll keep you guys posted on this channel every single week. So don't forget to subscribe to the channel down below, guys. But I am going to leave it at that for this video. But if you guys did enjoy this video and got some value out of this video, don't forget to smash that like button, as it really does help keep me motivated. Plus, guys, if you are interested in M1 Finance, it is a very simple platform to go ahead and use. I will say upfront, maybe the first day or two, it sounds a little confusing, but hopefully this video helped. There is a $30 affiliate link. I will leave that in the description. It's a limited time offer where M1 Finance is actually giving you $30 to go ahead and set up an account with them. But thanks again, guys. Until next time, I'll see you guys at the next